mistakes. By learning from the mistakes, it also tells a lot about your character. By character, I mean, like, if you are not in general, if you're not learning from your mistakes, if you are adamant in your nature, it's going to intensify, like it magnifies, like like you make a loss, and you're not ready to learn. You're not ready because the pain, the trauma it gave you is so intense that you are not ready to look up at the chart and see your entries and exits and see your psychology behind it and learn where you have been wrong, why it did not work out. Not just that the setup got invalidated. You need to learn from your mistakes, like, was it because of greed, was it because of fear, was it because of hesitation, was I being so hurried, was I rushing the trade, was I scared that the market won't move in my favor, that I exited too early, too quickly. So we need to learn from the mistakes. And for that, we comes to the journaling part. Not just you trade your journal, your entries and exit. You need to start journaling your emotions. By emotions, we need to write down, you need to pen down, like if you entered trade A, based on what, like when you were entering, what were the emotions, what the emotional roller coaster you were experiencing at that period of time. Like I entered a trade A, and at that time I was euphoric, and I was like insistent that it would go in my favor. It would definitely go in my favor. That's what is emotional journaling. Like if I exited a trade B because when my stop loss got it did not even reach my stop loss, and I exited it because I was being fearful that it would not turn into my favor. So I would write down my emotion as fear, and then I would write down the level of fear which provoked me to do the exit. And then after a month, I would look at my emotional journal, and then I would analyze where I've been wrong, what changes do I need to implement to get better at trading. So the very next point that we come to is sticking to one strategy, not changing our strategy seasonally, periodically. We need to stick to one, because if you keep changing, you do not have enough backtesting results. You do not have enough data to prove that your system works. You need to work on one single system at a time and have enough backtesting data, and then have it tested, not just virtually, not just stimulation. You need to see in real time, like with your real money, be it minimum percentage of your capital, but you need to see whether it works in real time or not. And the very next thing now, let's come to the very next thing, which is letting the market play out their role, because every strategy takes different time. Like for you, for day traders, they are trading on daily time frame, and in daily time frame there is more variation to it. Like some are trading in hourly, or some are trading in a 4-hour time frame, some are doing this 5-minute time frame. It depends upon